We only got 10 seconds before we get to initial jobless claims. Rick Santelli is standing by at the CME in Chicago. Rick, you got the numbers, please.
Yes, well, let's see. We're expecting claims. This is for the initial claims the week of March 15th and continuing claims, of course, a week in arrears, March 8th. 224,000 expected on initial. Darn close, 223,000, which means it's up 2,000 from a very slightly revised 221,000. We continue to be so well behaved. We haven't been above 250,000 since the first week in October, of course, of last year. Continuing claims, nudging a bit closer to 1.9 million, but close to expectations, 1,892,000. Rearview mirror, we degraded last week a bit from 1,870,000 to 1,859,000. The key there is last time we had a reading at 1.9 million. Well, it was January, second week of January of this year. Now, if you go back to last time that happened, of course, you're all the way back to November of 2021. Philly Fed is out. I always like to pay attention to that. The business outlook expected to be a positive number, and it is. Comes in at 12.5. Last month was 18, to give you a sequential notion of how it's doing there. The last negative number was Dece of last year, the last month of 24, when it was minus 11. And finally, we're looking at current account balance. It was started in 1960. The current read is minus 303.9 billion. In the rearview mirror, minus 310.3 billion was the biggest current account deficit ever, going back to 1960. Pre-COVID, the biggest number we had was minus 218 billion, and that was in 2006. We see that interest rates have moved down since the Fed meeting. 394 right now in a 2-year. That makes it down, down 4 basis points. And keep in mind, these are the lowest intraday yields in a 2-year for exactly 1 week. 1 week ago, Thursday, March 13th. If you look at a 10-year, Joe, it's at 419. That's minus 5. These are the lowest intraday yields since a week ago, Tuesday, which would have put it at March 11th. Everybody debating why rates are down. I heard Guy Adami, one of my favorites, talk about balance sheet runoff being the spigot turned off a bit. Hey, anything's possible. We never get a memo on these things. My own notion is, let's see, less growth, less inflation, abilities to bring it back down to 2%. We have less pretty much of everything going on within the U.S. economy, and I think that is the main notion going on. So we want to watch how the yield curve moves to give us more hints. I think the real key here is to watch a 2-year and to see how close it stays to 4%. Back to you.